Good morning, everybody. It is October 23rd, 2023, 8:45 a.m. We are here back again for another edition of the Market Open. Thank you for joining me today. Happy Monday. Another day, another week. The last week of October. By this time, next Monday will be October 30th. So this is basically the last week of October. And we're coming up to a pretty interesting end of month, but also end of year, because in just 2 months, we will officially be in 2024. Thank you all for joining me today. We've got a lot to discuss. First of all, I ironed my shirt this morning. Okay, I just want to say that. I am taking my shirts even more seriously than I was before. Before I would just like throw it on. And today I was like, you know what? I should actually iron it. Now, it probably doesn't look as good as it needs to because I haven't ironed in like 2 years. Quite frankly, I like in 2022, I never wore these shirts. So I learned how to iron again today. I remember when I was 11 and I ironed, my elbow got a burn that was so bad. But today I was like, you know what? Let me iron the shirt and see if it's okay. So I think it went all right, even though I probably didn't iron it fully correctly. Outside of ironing my shirt, on top of things that are hot, like that iron, we have the US 10-year that crossed 5% again in the morning right now at 4.972, basically 5%. It inched above 5% for a good 30 minutes while I was at the gym. I checked it and I was like, oh, this is not that good. So that is affecting equities this morning, and that's why stocks are down. Got a lot to talk about. We'll be talking about Palantir. We'll be talking about Japan. We'll be talking about Chevron announcing an acquisition today. We'll be talking about big tech earnings this week. Jam-packed week. Lots to discuss. So let's get into it. Garcia, Tessa Best, Midwest, Sethi Roth, Raul, Mr. Seymour Duck, Ty Gordon, Victor, Hakoon, Jared, Han Soria. Hello from Buffalo, New York in the building. Hello. Thank you for being here. Smitty, Imnop, Inbound, Monty, Davis, Andy, Landon, Jin Chuan, Neo. I'm sorry if I'm saying that wrong. Good morning, Mitt, Erwin, Jason, Johnny, Rajan. Thank you all for being here today. Pete, Dan Ripley, Stevie Stone, Kane Frost, the Schreier. Thank you all for being here. Amit, how are the U.S. futures? They're not good. And that's what we're going to discuss. In terms of this thing on my shirt, this thing right here you see on the left, I don't even know what this is. I think this actually happened in the laundry. This wasn't the iron. I think something happened in the laundry where I don't know how this happened, but yeah, that's something that's there. I feel like it's something from the detergent, but I don't know. Well, either way, it's there. You got sweat here everywhere like this. It's never going to look perfect, but at least it's a little iron. So hopefully it looks all right. Jab man, thank you for being here. Ahmad. All right. So let's get into it. Let's begin with the US 10-year. I think that is the most important thing to start the discussion in terms of what's going on right now. US 10-year at 4.972%. It inched in the morning above 5%. So right now you're seeing it at 4.974. It was at 5.012. About 30 minutes to an hour ago. And now it's there a little bit lower. As a result of that 10-year inching above 5%, you've got the S&P 500 at 419.75, down 0.34% on the day. You've got stocks like Tesla, which there's some other reasons why Tesla's down again today, but Tesla's at 210 in the pre-markets. Palantir taking a nasty beating at 1586. At one point, I think Palantir was at 1530 this morning in the pre-market, so recovered a little bit. SoFi at 731. Bank of America down 26.22 after a really good earnings last week. Robinhood down to $9.10. Robinhood was almost under $9. The NASDAQ closed Friday at 12,983. We're likely going to see that come a little bit lower as the market opens. So again, as the 10-year continues to rise, that means people are selling off these bonds, which means the yield on the bond needs to get higher in order to attract buyers. And those buyers that want to get that 5% and who knows, 6%, 7%, we don't know where that thing is going to, even though I think it's safe to say hopefully 5% is the top. Then that means there's going to be less liquidity in the stock market. The question becomes, why are the bond yields rising? And I think that is the fundamental question we all have to ask ourselves here to be able to make sense of all this. Why are bond yields going so much higher given inflation is, for a lack of a better word, starting to get under control? I know CPI came in at 3.7, but if you look at the data, we got Trueflation coming in at 2.34. There are a lot of tailwinds to see inflation start coming down. So why aren't investors recognizing that? Like, you only invest in this bond if you're afraid that equities are not going to do well. And the reason you're afraid equities are not going to do well, quite frankly, is because inflation is too sticky. I know there's other reasons why you're afraid equities won't do well. But inflation is kind of, I would say, like 60, 70% of that concern. if investors can see beyond what the Fed is seeing, which, most sophisticated investors can realize that inflation is going to fall off a cliff eventually in the next 7 to 8 months, then what is the benefit of getting that money from a 10-year? And I think it's because, and this is a clip we're going to play that I think is actually a really good clip highlighting the inflation problem. Even the Fed doesn't know why the 10-year is rising. And because the Fed and Jerome Powell himself at the New York meeting on Friday, or I think Thursday last week, said, look, I have no idea why bond yields are rising, even though I'm happy with how inflation has come down. We might have to be a little bit more tighter. That's what kind of got the market spooked up last week. But he kind of showed he had no idea. And because he had no idea, that's why some investors believe that the Fed has lost control. Let's take a listen to this to give us a little bit of understanding of why the 10-year is at 5%.
Treasury above 5% for the first time in 16 years. Let's bring in Kamal Srikumar, president of Srikumar Global Strategies, and get his view on what he thinks is going on. Sri, and I know you watch, and we've been talking, we've used terms like untethered and unmoored, and I think that's what you want to focus on, because there could be some, I guess, somewhat disturbing outcomes if the Fed has lost control of its ability to set long rates. We've never believed they could set long rates, but for a while it looked like it was all orderly. They haven't raised rates in a while, and we've had, 80 basis points, 70 basis point increase in the 10-year. That could be troubling. It is to you.
Absolutely. I put out a...
And again, that is the confusion. The Fed hasn't raised rates in a long time, but we've had an 80 basis points increase in the bond yield.
Report on Saturday, Joe, saying precisely that for the first time, you have Jerome Powell, who had never been doubtful as to what he did, even though he has been sometimes wrong on expectations of inflation and interest rates, finally said in his Economic Club of New York talk, as well as in the Q&A session, that he did not know what is causing the higher bond yields. He attributes that to term premiums. The term premiums are not measurable. And therefore, essentially, the Fed chairman comes down to saying, I don't know what it is. And when he said that, I said, we are in completely uncharted territory. Things are going to get worse next week because of the fact that the Fed is totally out of control and they don't know what to do next. So you are absolutely correct. I think unintended consequences are going to happen. I've been saying that on your show for quite some time, whether it be a huge bank failure, whether it should be pension funds losing a lot of money, commercial real estate suddenly worsening, or a CLO, commercial loan market, and levered obligations having difficulty, somewhere things are going to break. And rather than expecting 3 to 6 months, I'm going to say within the next 4 or 5 weeks.
Now, that's a pretty interesting prediction, right? That instead of the next 3 to 6 months seeing something break, which is what most people expected. Most people, remember, in early September, we all thought, all right, end of year rally, and then it'll break in 2024. So we'll all get a chance to kind of sell our stocks in December, and then you can either decide if 2024 is going to be a good year and keep your stocks, or you can take your profits and watch the world burn in 24. Now, it's kind of like, well, if that end of year rally is not happening, then what's going to break, given this 10 years inching above 5%, is going to happen quicker than later, because you cannot have a 10-year at this level and not have interest rates continue to be raised. Like this, there's some fundamental structural issue in the economy, and we might find out soon enough what it's going to be.
Individuals that are more sympathetic to Chairman Powell's plight have actually said that this was totally Chair Powell's doing and exactly what he wanted, and that when he said higher for longer in recent appearances, that he said it better, or said it in that he actually stimulated yields to go higher, and it was exactly what he wanted, and he kept saying higher for longer, and that he orchestrated deliberately this move up to 5%. And I don't know. We've been saying higher for longer for 7, 8, 9 months, and suddenly we're almost not inverted anymore because of what's happened on the long end. Shri?
There are 2 points in response to your the issues you raised, Joe. They are very relevant. First of all, Yes, he wanted inflation, the interest rate to be higher, the yield to be higher, but I don't think he wanted it to go well over 5% as it's done again today, and in that rapid fashion as he has done it. Second, if he is looking for yields to stay that high and to go up that rapidly, if that was his intention, he also must be intending to create a train wreck, meaning that he is going to cause something to crash. And if you tell me that is part of his intentions, then he's right doing exactly what he wanted to do. But that's not, I'm sure that's not what the chairman wants. What he wants is a mild increase in the unemployment rate. He wants the job opening rate to come down. He wants the inflation rate closer to the target, but otherwise the economy moving smoothly. But that's not what he's going to get.
And see, this is the larger issue I think that we're seeing today. What Jerome Powell wants is unemployment coming down to or going up to a reasonable level. The 10-year not being at 3% yield, but definitely not being at 5%, right? We kind of thought 4.1, 4.2 was kind of that sweet spot where there's enough liquidity in the markets, but there's not that much liquidity leaving the markets. And then on top of that, he wants inflation to come down. So he wants a triple threat, right? He wants inflation to come down. He wants the 10-year to not be yielding super high or super low, and he wants unemployment to inch at around 4%. He's getting pretty much none of those things. The 10-year's at 5. Unemployment's at 3.6, 3.7. Maybe it's at 3.8, but we're seeing like no signs of unemployment get to some dramatic level or even at a 4.1, 4.2%. People, this is like one of the best economies in the world to get a job. This is not 2008. Like this is like the time to apply for jobs and get a really good paying job. And then on top of that, inflation, although we are looking to the fact that it's going to come down over the next couple of months, it's still at 3.7% headline, right? Core PCE is down, but not down aggressively. It's just down enough so that the market doesn't literally collapse overnight, right? We've had some decent reports, but not amazing reports. And so you're getting to this point where what the hell is Jerome Powell supposed to do? And I think that is why we're seeing the 10-year get to this 4.95% level, because at some point, if Jerome Powell himself does not know how to solve the problem, and he's been doing, as good of a job he thinks he can do, we haven't raised rates in a while. And when we did raise them, it seemed like it was for the right reasons. What am I supposed to do to get these bond yields to come back down to normal? Eventually, I do think that if earnings go well, and that's what we're about to transition to next, our earnings preview, because we've got Apple, Microsoft, Amzn, we got all these big companies reporting earnings this week. If earnings do well, then these stocks generally are going to be looked at as cheap, even if they might have a little bit of a premium on them. And investors are going to want to own the most innovative companies in the world from the United States of America over the United States debt, right? Like, do you want to own the United States debt or do you want to own Amazon? Now, the question becomes, are Amazon earnings going to be good? Are Google earnings going to be good, et cetera? And, not to get more bad news, but I do think as well as earnings are going to be, there is something we need to consider in terms of how earnings are going to look over the next couple of days. So let's transition to that. Let's talk about what's going to go on with earnings. We have a lot of companies reporting this week. We have all of big tech except NVIDIA reporting. Tesla obviously reported already last week, and we've got some more Tesla updates. We'll talk about them. We've got Microsoft and Google tomorrow, Logitech and Philips today. Philips actually did pretty good. Profit guidance increased, so Philips was fine. They're not big tech, but nonetheless, still a pretty big company. Coca-Cola, Microsoft, Google, Snapchat, Visa, Waste Management tomorrow, Meta, Boeing, IBM on Wednesday, Amazon and Intel and Ford on Thursday. And then on Friday, you've got ExxonMobil. So Meta, Amazon, Microsoft, Google, those are going to be the big names. Apple's not going to be this week, but those four are incredibly important. Now, one of the reasons why these earnings might not be as great as we want them to be, even if all those companies do well, is because of how big those companies are. And so this is a clip I want to share around what is kind of the concern on Wall Street around big tech earnings and the scale of growth needed in order for these earnings to actually be substantial enough to move the needle, given the current valuation they're at.
Magnificent Seven reporting this week. Which one of these reports this week do you see having the biggest impact on the markets?
Well, I think the one that's going to be most controversial and is kind of a consensus long is Meta. But if you look into next year, the street is looking for 13% growth at Meta and 10% growth in the advertising business at Google. And you think about those two companies together, that means they'll be bringing in $40 billion of additional revenue in their advertising businesses next year. And the question really is, where's that going to come from? I think your previous guest alluded to the risks around the consumer, and Meta is a company that gives guidance for fourth quarter. I think people will be looking for reduction in expenses, but it's going to be whether they can sustain that top line growth and bring in that absolute level of spend that's going to be really controversial.
Speaking on Meta a little bit, I went through their shareholder deck over the weekend just to get a better update of their numbers. It's very important to remember Meta is just a juggernaut of a company. They did $32 billion in just total revenue last quarter. Like $31 billion was all advertising. The rest was their other stuff. They have 3.7 daily active users, 3.7 billion daily active users, 2 billion just on Facebook. For them to grow users in and of itself is going to be like a hard challenge. And then on top of that, for them to keep those users engaged and monetize is also going to be a challenge. It's not that they're not going to bring in another 30, 32 billion bucks this quarter, but are they going to bring in 35, 36, 37? Like at what point do they really bring in the numbers needed to be able to show growth? The one thing to understand about Meta and a lot of these big tech companies over the past 18 months is they cut so many expenses in terms of layoffs, restructuring. Zucks got rid of the middle managers that manage the middle managers, right? Like it was ruthless, that you had all this cost reduction plus share buybacks that you were able to show your earnings per share and revenue growth accelerate substantially from 2021 when there was so much fat. Now, even if they're going to be reducing costs, they're not going to be reducing it as aggressively as they were in 2021 because you can't just keep firing people for no reason. And so then you got to actually grow as a business. And I think that's going to be a little bit harder.
So you're saying it's all about consumer strength. I mean, remember last week, or was it last week, where we saw that better than expected retail sales number? We keep hearing these projections for considerable growth this holiday season, but you're saying you have doubts about companies willing to spend to chase those consumers, it sounds like.
Well, I think there's two things that you have to separate. One is the consumer spend, which is facing a lot of headwinds, whether it's student debt repayments, it's the lag effect of interest rate rises, it's all the various pressures piling onto consumers, higher energy prices and so forth. And on the flip side, what you've seen in many of the big tech companies is steep reductions in their own expenses. It's not just headcount expenses, it's pullbacks in advertising spend and so forth. So their margins will be fine. The question is, can they find enough top line growth in their overall businesses? And again, you have to take in mind the scale of these big tech companies versus their smaller peers.
I want to talk top line growth when it comes to cloud infrastructure. Of course, we're talking Amazon, Microsoft, and Google, their cloud business. Really the growth driver for each one of these companies. What are you expecting from these results? Are you expecting to see a reacceleration in this cloud business and any shifts in market share, any noticeable shifts?
So what you saw with these cloud players is that they all faced a reduction in growth because companies were optimizing. And whilst they couldn't take away the licensed software that they committed themselves to, they could reduce how frequently they were compiling their apps or managing workflows in the cloud. Now what you'll see happening is maybe not a reacceleration, but hitting that trough point in growth rates at the likes of Amazon or Microsoft. But again, you have to look at the scale of these businesses.
So the point he's making about cloud is very important as well. I think Google Cloud will continue their third consecutive quarter of profitability. Amazon has always been profitable. Microsoft's been profitable on their cloud businesses. But again, the question is, how well can they grow given, I think Google, if I'm not wrong, did $7 billion in revenue on cloud last quarter, which is just a lot to top, right? Every single quarter. Amazon, I think, they did many tens of billions. For them to keep topping that every quarter is one of the issues we have right now, especially in a world in which all SaaS companies, even though some of them are getting a premium, like a Palantir, Snowflake, etc., there is definitely decreased IT spend throughout the entire industry. And if there wasn't Palantir or Snowflake, they would be growing even more aggressively than they're growing right now. But because of higher interest rates, some companies just don't want to be spending as much as they are right now. So I think cloud is not something to worry about for the big tech companies like Microsoft, Amazon, or Google, but the extent of growth this quarter, given everything we're seeing, might not be super substantial. And if it's not substantial, then we're probably not going to see an aggressive growth rate in regards to cloud. But top line advertising on Google, Amazon, and Microsoft, I think is going to be fine. Microsoft's numbers, like I think total revenues are going to be fine for all these companies. Margins are going to be great. It's just, are they growing 1% year over year, 2% year over year? How much can they show in that top line growth to justify the 28 to 44 PEs that some of these companies have, Meta being the most expensive at around 36 priced earnings. Okay, let's discuss Tesla. So that's the big tech earnings. We're going to get a lot of that tomorrow. So tomorrow we'll get a lot more on what's going on with big tech. But the one thing to be concerned about if you own big tech is just how much can they grow? And with the 10-year at 5%, how much do investors want to own them if they feel that there's some room to fall, given they're not growing as much as before. Tesla. So we got an article out by Reuters this morning showcasing why there's some issues in Tesla. And that is leading to some problems. So there's actually a couple of pieces of news. So let's go to the first one. Okay, so Tesla also said its capital expenditure for 2023 would exceed the $7 billion to $9 billion target it had laid out this year as it ramps up output and as its factories gear up to roll new models. So this is kind of the main headline that is causing Tesla to go down in the pre-market, outside of the macro being pretty nasty to all stocks. They're spending $2 billion more in CapEx. And that's why, that's obviously not the best for the stock in the near term. Now, look, in the long term, $2 billion is nothing, right? They have to be able to do all that stuff as they ramp out output in their factories. But in the short term, it's another headwind that is coming up to the stock. And then another piece of news that came out this morning, the U.S. Department of Justice has sought documents relating to the driving range of Tesla's vehicles. The company said on Monday, after Reuters reported in July that the company exaggerated their potential driving distance. The automaker also said in a regulatory filing, this is as of this morning, that the Justice Department was looking into its self-driving feature, personal benefits, and personal decisions, in a move that marked intensifying regulatory scrutiny of the Elon Musk-led company. Now, look, the DOJ has been investigating Tesla since Tesla was born, right? Like they're always going to have a beef with Tesla. So I don't think that's kind of the headline here, that Tesla's exaggerating their potential driving distance or whatever. Like that's going to be inevitable. The problem here is the $7 to $9 billion increase in CapEx that has led to Tesla falling this market. Over the weekend, I had two different podcasts. One with Vince. If you just click on live on YouTube, you'll see both of them. One is someone who sold their entire Tesla position and his logic for why he sold. And then one was with Warren Redlick. Some of you guys may know him. He's been in Tesla since 2016. He was gracious enough to give me 2 hours on Saturday night where he discussed the bull case for Tesla. And Tesla right now trading at 210, down 0.76% in the pre-markets. I think the biggest concern that we're seeing with Tesla right now is this question of automotive margins. And I hate to sound like a broken record because, it was funny for Vince, who sold out of his Tesla. That was the only thing he cared about. For Warren, he cared about robo-taxis. He didn't give two craps about automotive margins. So it really comes down to what perspective do you have as an investor right now as you're looking at Tesla stock. Look, I think if you're interested as a long-term investor, this is not the worst price to even think of starting a position. However, I would still be very scared to go balls deep here, just given where the 10-year is, right? Now, if the 10-year was at 4.1, 4.2, Tesla might not even be at this 210 level, right? That might be a little ridiculous for it. But in an uncertain macro, this is going to get tougher, along with the fact that obviously prices have to come down, margins have to get cut, which means just lack of growth. Now, Warren's entire thesis on Tesla is 20 million cars by 2030, right? That is his logic, 20 million cars by 2030. If you believe in that, the stock is incredibly cheap, right? Like Warren believes Tesla's a $100 trillion company, and he's not joking when he says it's a $100 trillion company. If you don't think it's a $100 trillion company and you're buying it at 700 billion, then, there's a little bit more factoring you need to do in terms of your analysis. Palantir as well. We'll talk about Palantir in a second. Palantir right now at $15.88, down 1.43%. Palantir fell from about $18.40 last week. It was riding high at that $18 range, now at $15.88. I think this is also purely macro driven in the context of Palantir falling. There's no fundamental news that has come out on the company in terms of it needing to come down. What is it? 5-10% since last week, but the macro has changed. Palantir did get a premium after the war in Israel broke out, and as a result of that, we're seeing it come down. Lockheed Martin, let's take a look at that. This stock is up still. I mean, this is just incredible that Lockheed Martin is still up, and the reason Lockheed Martin is up is because we are seeing that, let's go to it right here. Lockheed Martin on October 20th. Where's the low? I want to get to. It was at, I believe, 4:30. Let me actually look at a better chart here. Let me pull it up here. It was at 4:30 before it really spiked up after the war broke up. And it is still green in a market where everything is red, at least this morning. It is green. Yeah, it's up 7% for the month. It was at $397 on October 5th. The stock is at $445 as per October 20th, because on October 7th, obviously, we had a horrific terrorist attack. All senators are buying Lockheed Martin. Yeah, they're also buying another company. I'm forgetting the name of it, but it starts with an N that does defense tech. And this is where it's really sad to be an American and see that Congress people that are going to regulate. Like literally, Joe Biden sent out a message to Congress saying he wants $100 billion for Ukraine and Israel. And so Congress is going to, like most likely, if we can ever find a Speaker of the House, sign away $100 billion of our tax dollars to Israel and Ukraine. You can agree with that. You can disagree with that, whatever. Just one thing that's obvious is that some of that $100 billion is going to Lockheed Martin and Raytheon Technologies because they're the two biggest defense manufacturers in the world, or at least in the United States. They're going to be building all the guns and the weapons that are going to be used in this war that's probably going to last for however long it lasts now that we're eventually going to get involved in. And you've got Congress people buying the stock of those companies, and they're the ones designating the funds to those companies. So it's a very sad and just hypocritical thing to see as an American because you just don't want, I mean, literally CNBC analysts can't buy stocks because they're talking about stocks all day. But Congress people that are designating the funds and creating the acts that could ban a chip from NVIDIA going to China are the ones that are able to buy. It makes no sense. It is absolutely insane. Northrop Grumman. That is correct, Mark Strand. That is correct. Northrop Grumman. This is another company that is a defense manufacturer to look into. So it's really sad that this is what's going on in the United States of America. But, you know, nonetheless, if it's not going to be banned, we as investors also have to think, well, where is that money going to? In the context of Palantir, let's transition to Palantir now. Again, is Palantir going to get any of this $100 billion that Joe Biden is trying to flow around? Is it going to come from Israel? Well, we do know one thing that's happening this week. Maybe that NHS announcement will be announced, but that's not the thing we actually know. We got a report from the Telegraph yesterday, which is a journal in the UK. Silicon Valley bosses to jet in for AI summit in boost for Sunak. So I got the article outside of the paywall. Basically, the article mentions by name Alex Karp will be visiting Rishi Sunak this week in the United Kingdom, and the PM hopes gathering will ensure Britain's leading position in regulating the technology. So the UK is basically going to be having the same type of summit that the White House had a couple of weeks ago, where Elon Musk and Alex Karp were sitting together, having this kind of discussion around how do we regulate AI? How do we make it more practical? How do we allow AI to basically operate in a way that's meaningful? What's interesting to me is, of course, Alex Karp was invited. Why was Alex Karp invited? I think for a couple of reasons. Number one, Palantir has designated their headquarters of AI in the United Kingdom, where they have 800 employees. So they've kind of branded the UK as their de facto AI hub, where they'll be doing a lot of artificial intelligence research and development. And then on top of that, you've got this NHS announcement coming soon. Now, I saw an interview over the weekend where Rishi Sunak was getting grilled by a reporter. And when I mean grilled, I mean basically the reporter was like, look, you've been in office for almost 2 years now. Where's the, why hasn't the NHS been fixed? And he's like, look, I'm working on it. It's getting better. And she was like, no, it's not getting better. It's getting worse. But he's like, actually, and she's like, no, it sucks. I think Alex Karp being invited to meet with Rishi Sunak, it's not like Palantir is not doing anything super fun in the context of AI in the UK, right? Like not outside of branding themselves as the development center for R&D, they haven't established or shipped any products that are specific to the UK. Outside of the fact that they've been lobbying the hell out of the government to get this NHS contract. I personally believe the NHS contract is decided. It's going to happen. I personally believe, this is my opinion, that Palantir is getting this deal. And I believe Rishi Sunak meeting with Alex Karp is another justification for Palantir getting this deal. Remember, Alex Karp met with Rishi Sunak at Washington, D.C. at a baseball game. They were eating hot dogs and popcorn, talking about the NHS back in May of 2023. So 5 months ago, they met at a baseball game. Now they're meeting in the UK in a much more formal setting. I think these guys know that the deal is done, and I think eventually Palantir is going to get it. The question simply becomes when it's announced. The NHS said mid-October. It's October 23rd. Last time I checked, half of 31 is 15.5. So on the 15th or 16th day of October, that would be mid-October by the literal definition of the word middle. So we have not gotten an answer yet, even though the NHS said it would be mid-October. So maybe it comes in earnings, to be honest. At this point, I'm just like, maybe it's being announced on earnings, but we'll see, when it ends up becoming announced. There will be an uproar in the UK if Palantir gets the deal. I think there also will be, and I think the UK is getting ready for that because absolutely, I think people are going to go crazy if they get the deal, even though, it'll be beneficial for them. Smitty says NHS is taking too long to announce. Makes me think Roku's getting the deal. Could you imagine they announce it? They're like, Roku is the winner of the $500 million contract. And then Roku's just like playing ads in every doctor appointment the whole time. That'd be insane. Mid-October of 2025. Yep. That's when it's going to happen. Mid-October of 2025. This is an interesting comment. So Matt says, huge Tesla bull and I'm reducing my position. Wow. Ah, that's interesting, Matt. I've known you in the chat as someone who's very bullish on Tesla. So are you, I'm assuming you're in the green on this average, but are you selling at a loss then at this level right now? That's interesting. You know, that's one of the things Warren did criticize about some of retail investors. He was like, why is everyone selling now, you know, at a loss, kind of this buy high, sell low strategy. It really becomes a question of like, look, as a Tesla investor, do you think it's cheap at 211 and it's a dip, or do you think there's a lot of headwinds coming up for the stock? I kind of think, you know, let's check on Enphase as well, that Enphase at 97. Wow, down another 1.3%. We'll talk about Enphase in a second. I kind of think that now that everyone's got super bearish on Tesla and Enphase, now it's gonna go up. Like I kind of feel like the contrarian thing is gonna happen as it always does in the market. Like, you know, everyone's saying, all right, we're seeing below 200 on Tesla. It's like, all right, is it actually going to happen now, or are people going to step in and buy the dip? I mean, remember, Tesla was at 260 last week or 258. It's down pretty aggressively already. Like, is there not anyone willing to buy at these prices? And we're going to see when the market opens what people are thinking. But I don't know. I mean, if you're long-term Tesla, I don't know why you would necessarily not be buying at these prices. The funny thing about retail, again, retail owns most of the stock. Usually when a stock starts to compound to the downside, retail starts to sell off because they get super scared. They want to save some of the gains they have. And institutions is what comes up and swallows it. I don't know if institutions are that excited about Tesla right now and if they're going to swallow the stock. And if they're not, then if retail gets scared, retail is going to sell. Like it happens all the time. And so we're going to end up seeing how retail ends up thinking about this. Breakfast Pizza said, Vince's logic may be more bullish. Most Tesla retail are surface level researchers, if that. Yeah, you know, the person who I interviewed who sold his stock, his main logic was, and again, we went through a pricing model, so it wasn't just him talking. Like we went through an Excel sheet. He only sees around 4 to 5 million cars delivered by 2030. And that's what creates the basis for his entire bear case. And I think, honestly, that is the answer. Like, if you are a Tesla investor, it comes down to, do you think there's 10 million cars or 5 million cars in 2030? Warren Redling thinks there's 20 million. And Vince thinks maybe there's 5 million. And that determines the robotaxi fleet. That determines the FSD ability for the robotaxis to obviously work and for people to want to pay that subscription. That determines the volume of output. That determines not caring about automotive margin. That determines revenue growth. That obviously will eventually determine EPS. Like, that number in 2030, I think it really produces the bull case or bear case. And they're going to do 1.8 million this year. We'll see the projections for next year. It has to CAGR at a 50% growth rate every single year to get to 20 million by 2030. And I just don't know if that's necessarily going to be the case. And if you believe that that can happen, then there is a massive bull case and it's cheap. If you don't believe it can happen, maybe it's still cheap, but maybe it's not going to be the crazy return that a Warren Redlich is thinking by 2030. And again, how do you get those 20 million cars? It's Cybertruck, and it's this next-gen vehicle that's supposed to replace the Toyota Camry or Honda Civic. The question simply becomes when they come out. Bitcoin right now at 30,687. So congratulations to all the Bitcoin holders. We got Bitcoin mooning this morning, I would say, really. I mean, I think it ended Friday at like 29 something. And now it's officially crossing over that psychological barrier of 30,000. Let's look at some of the Bitcoin stocks. Riot, which is a Bitcoin miner, they're up 4%. Marathon is up 4.39%. Coinbase, I'm going to guess 3.2%. 2.2. Okay, so it was 1% off. 2.2%. And then what else we have? That's a Bitcoin. CleanSpark. Let's look at CleanSpark. CleanSpark is also a miner. Should be up today. Yep, another 5.87%. So if you've got a little bit of a Bitcoin ETF of stocks, you are doing really well this morning, along with Bitcoin itself being up at this $30,000 range. And it's performing inversely to the S&P 500, which is great. I mean, that is the thesis. That's how it's kind of supposed to perform in the most bullish of scenarios. So S&P 500 is down. Bitcoin is up. Adam says everyone is a bull when it's green. That is also correct. Jesse says Robinhood yield is paying my rent. I love that. That 5%. That 5%. Like literally, you either get it a 10-year or in Robinhood, you're getting that 5% at this point. S&P 500 at 419. It is below the 200-day moving average at 420. It is officially down again from that 10% correction we saw just a couple weeks ago when we got to 419 from 460. We are right back at that same level. So all the gains we had made, we got up to about 439 on the S&P from 419, up 20 points. We're right back down to 419. Either we're setting up for a phenomenal November and December, and it's going to be a hell of a rally. Even if we just go back to 450 on the S&P, it would just be a great rally. Or we're going to trade sideways, or this is going to be kind of not the best end of year that people were expecting. Enphase is at $97 in the pre-market. Now, we talked a lot about Enphase since last week. They have earnings, I believe, on the 26th. So that's going to be on, what is it going to be? On Tuesday? No, not Tuesday, Thursday. And so we're going to see what happens with Enphase. I might actually be on a flight when Enphase reports earnings. So I might not be able to cover that live. So when I get off that flight, we'll see what the damage is on Enphase. The one thing that I'm thinking might actually be good for Enphase is, again, they came down because of SolarEdge earnings. If they even kind of show that their numbers are not as bad as SolarEdge, then that whole structural problem in the solar industry that investors are expecting, which is why they've given the 20% haircut to Enphase that they gave to SolarEdge right now, where is it at in the pre-market? SolarEdge at $82, down 28% since Friday. Then maybe that's not going to exist. They remember Enphase already guided down to, I think, $610 million of revenue this quarter. Now if they come in at like 500, then yeah, it's gonna be bad. But if they come in at like 600, 604, 598, like if they miss aggressively, but not as aggressively as the street expects, maybe Enphase doesn't take the tumble that we thought that we thought it was going to take as per SolarEdge. And maybe it's an amazing dip right back up to 110, right? Because the market's like, wait a second, why did Enphase sell off this much? Like this company's growing like crazy. The problem is a lot of these sectors are cyclical and they do trade with each other, right? If you kind of look at their charts, they go in line with each other. I mean, look, if Nvidia, I mean, we saw this with Nvidia and Palantir, right? Nvidia had a great earnings and Palantir was up 5% on Nvidia being up like 10% after hours back in August. And these things do trade with each other at some level because Nvidia determines AI demand and Palantir is an AI company. Whether there's a real link or not, it's market perception. But SolarEdge and Enphase, there's a real link. They're the two oligopolies here when it comes to microinverters that are well known in the stock market, that are retail favorites, and they're going to trade side by side. So we saw SolarEdge fall almost 30%. Enphase has fallen 15%. The last 15% is waiting on Thursday, either to the upside or downside based on how their earnings go. And we will end up seeing how the market reacts. Adam says, for the life of me, I don't understand the bull case for Enphase. Again, the bull case, the way I understand it, is solar penetration, residential and commercial, is about 4% worldwide. And so you need something called a microinverter, which is what is underneath the panel. The panel is a commodity. The Chinese have commoditized it, but the microinverter is not a commodity. It's highly specialized technology that's not easy to be able to create for these solar panels. Enphase makes those microinverters. And as a result of that, they've grown, I think, like 5,000% over the past 5 years because solar penetration has continued to go up from like 0 to 4% and eventually from 4% to even 20%. There's a ton of growth factored in. The problem is, again, the interest rates are high. And to finance solar panels, if you're going to pay 7-8%, you're going to be very wealthy. Most people don't have that type of money, especially if they don't have the type of money to be able to pay for a car, which means it's just not going to be that easy to finance these solar panels. On top of that, we got another headline, and I want to lay out a list of headlines that I have that I wanted to say. So transition to some macro stuff here. Americans are down the most they have ever been on their car payments in the past 30 years. Let me see if I'm getting this correct. Yes, Americans are overdue on car payments at the highest level in nearly 30 years. So if you have a car payment, I pay $311 every single month for my car payment on the 25th. So in 2 days, another $311 will leave my bank account. I think I have 10 payments left, and then I fully own my car. And I've been paying it off since 2019, Honda Civic. People are overdue on those car payments. Essentially, people have not paid those payments, at least in America, at the highest level in the past 30 years. That's not good for Tesla. That's not good for Enphase either. That's not good for any company that has to finance things at higher interest rates. Because if Americans can't pay the $300 to $400 to maybe $500 they're paying on car payments that they financed a couple of years ago, how are they going to pay the $900 to $1,100 for a Tesla? Like it just doesn't make sense, right? And like I think that's the problem. That's what I was trying to get out of Warren. You know, in the beginning of the interview, for the first at least 20 minutes, I was really pressing him on this issue. Like, what about interest rates? And he's like, well, I don't care about interest rates because Tesla's going to be a $100 trillion company, the bot, robotaxi, 20 million vehicles, 2030. Like that stuff's irrelevant to me. And so that's when I decided, you know what, I'm going to just let this discussion be a full bull discussion. Let him just give out a regular bull case because there's no point to ask somebody what they think about interest rates if they literally could not care less about what's going to happen in the near term with Tesla, and they're only looking to the next 10 years. If that's the case, that's the case. I personally think, and I've had this experience because I bought Palantir at $25. Wait a second. The time that you buy a stock really does matter. If you bought Enphase at 200 and now it's at 98, might go to 84, might go to 85 after this earnings, you have to wait to go above 100% in terms of gains on the stock price, which is not easy to do, just to break even. And I think, people that Warren has an average from 2016, his average is incredibly low because he invested so long ago. I think his perspective is, well, my average is so low, let Tesla fall another 50%, I'm still up. That's fine for you. And I think that, for people who bought Palantir at $4, $5, $6, whatever, if your average is $6, then that's great. If you bought at 20, 25 and you DCA down, you know how long it takes to break even. Time does matter and valuation does matter when you buy a company. And I think that's my biggest mindset shift that has happened over the past 10 years. And so that's why I'm more careful with Tesla. People think I'm bearish. I'm like, no, I'm careful because I messed up with Palantir. Like I bought it way too high. I didn't need to. I could have had a $6 average if I was just more patient, but I wasn't. And these are mistakes that I have to learn. And if I miss out on the next 10x because of that mistake, I'm happy missing out on that 10x because I'd rather learn from that mistake and not make that same mistake again versus take a massive risk and be down and wait for years. Like if Palantir didn't go up 150%, I would barely be breaking even, right? Like, so like that, and that required a tremendous, ChatGPT had to become mainstream for me to just break even on my Palantir position. Like, honestly, there was a lot of luck involved in me breaking even on breaking even on Palantir. And I would imagine for a lot of other people as well. So I really do think valuation does matter. And these concerns about interest rates, you can't just say I'm a long-term investor and get out of them. I truly do think it's important to follow them on the day-to-day, especially if you're becoming a more sophisticated investor. It shouldn't be the only thing you look at. Tesla now down at 209.83 in the pre-market, but it is something that I think is relevant. S&P 500 at 419, Palantir at 1590. We got about 4 minutes until the market opens. Appl is at 170, about 54 cents away from hitting that 169 level. Remember, Apple sales of the iPhone 15 are down 5% year over year in China. That's why Tim Cook went to China and started dancing like a monkey for the Chinese government in order to make sure that they can help people buy the iPhone. But he is currently in China trying to get people to buy that damn phone. Look, I'll give it up to Tim Cook. I love this phone. It's great. I mean, it's fast. It's easy to use. I love this phone. iPhone 15 Pro Max is just absolutely phenomenal. I'm probably not going to upgrade for like another 4 years. So they better get as much money as they can get out of me in Apple services because, look, the phone is great. But I don't. That's another company for earnings. Like, how much is Apple really going to be able to show growth this quarter when it comes to that iPhone? And it's tough. Don Juan says, Amit, you got me into Palantir at a good price and Chris got me out at a good price. Left to my own devices, I would have continued losing money. The funny thing is there's a fund manager. I've told the story before, but he watches my videos. And at around March, when Palantir was $7, he came across my videos. He manages about 30 million to 40 million bucks in Texas. And he bought like 300,000 shares at $7, right? And so obviously he's made a lot of money. And, we talk here and there, we keep in contact. But it's so funny because I bought at such a high average, I don't even have as good of an average. And the only reason that guy has good of an average is because he found my videos. And it's like my videos got him a good average and I'm the one making the videos and I don't even have that good of an average. That is why the time when you buy a stock does matter. It absolutely does matter. And this idiotic idea that like, oh, well, I'm just a long-term investor. If you don't break even for the next 4 years, there is an opportunity cost of your capital. You can say you're a long-term, you want to sleep well at night, but there is an opportunity cost of your capital. And the better thing to do is just find a better valuation where you can sleep at night knowing, look, if I really think Palantir is worth $40 billion at $20 and I'm ready to buy it, then I will buy it because I really think it's worth that much. If I don't think it's worth that much, even if it goes to 21, 22, do I really want to buy it at 20? Do I really want to buy Tesla at 270? Like everyone was saying, hey, buy it. It's about to go to 300 if you're not comfortable with the valuation. Because if you're comfortable, you can DCA. But if you buy it off hype and FOMO, then your DCA is not going to even be worth it because you bought at such a high price that your DCA is barely going to get you to a price that's decent. And that's the tough part about figuring out how to time this stuff. Entry points matter. Yep. I believe entry point matters. Smitty says, thank you, Mitt. The whole I'm a long-term investor. I don't care about short-term fluctuations. Is such a cop-out for buying at terrible prices. Yeah. And look, no one should feel bad for buying at a terrible price. You should not feel like this level of self-hatred because all of us mess up and buying at high prices. Like that is like the biggest investors in the world. Look at Bill Ackman, right? Like there's plenty of examples of people that buy at high prices. The question becomes, were you confident at that valuation or were you doing it because you just said, oh, I'm a long-term, so it doesn't matter. And I think I'm getting to the point where I need to be comfortable at the valuation and then I'll decide if I can use the long-term excuse to help me justify the investment. All right, here we go, folks. The market is now going to be open. It is 9:30 a.m. on October 23rd, 2023. Thank you, 769 people for being here. I love that it's 769. That is just epic. The stock market is now open. Wake your ass up. Here we go. Palantir opening down 1.12% at $15.93. So we got $15.93 for a Palantir, going right below $16. SolarEdge, $81, down another 2% from today, 2.29% from Friday. Enphase down 1.45%, now 97.71. We are going to see how Enphase ends up going through this market open. Let's go to Tesla, 209. If you're just tuning in, the headline news on Tesla is that their capital expenditures will be increasing from $7 billion to $9 billion for the full year of 2023. Reuters reported that about an hour ago, and that's why we're seeing this 1% decline in Tesla. Now, quite frankly, the macro has a lot of these stocks down 1 or 2%. So the fact that it's down 1.3% and it has that bad news that came out this morning, which isn't really bad news, but obviously there's, some more headwinds in terms of expenses for the stock. Being only down 1% is actually not that bad, in my opinion. So Tesla right now at 209. We'll see how it ends up going. Congratulations to Bitcoin shareholders. Bitcoin is up. And if you own any Bitcoin stocks, Riot up 3%, Marathon up 2%, Coinbase up 1%, and CleanSpark up 3%, then Bitcoin is probably green today in your portfolio, and you're seeing a little bit of green amidst the red. Apple at 170.95. PayPal, another 52-week low. Ladies and gentlemen, clap it up for PayPal. Pain Pal, Pay Enemy, whatever you want to call it, they've decided to get to another 52-week low. The price is just never right for PayPal, continuing to be down at $52.83. It is what it is. I think this company is not broken. I think the stock is broken. And a new article we'll go through in a little bit actually just came out by my good friend Steve, talking about why he's buying PayPal going into earnings on November 7th. So we'll see what ends up happening with PayPal. But obviously the market is like, you know what? We still do not see the story. And as a result of that, PayPal has fallen down. 727 on SoFi, down 1.36%. Oh, one more thing about PayPal. I went to the App Store this weekend, and I was just looking at the top apps in the App Store. PayPal is number 48 in the entire iOS App Store. Not finance, not money brand. Literally number 48 in the entire App Store. That's like all the apps in the United States of America. That means they're getting, you would argue, 200,000-300,000 downloads every single day. Venmo, which PayPal owns, is number 40 in the entire App Store. And then Cash App is like number 20, right? So PayPal and Venmo are very, people say who uses PayPal anymore? Apparently a couple 100,000 people download the app every single day, right? So like this idea, and that's only on Apple, that's not even including Google Play. So there is a lot of people, there are a lot of people, it seems, to be entering the ecosystem. The question becomes, can they extract margins from them? And if they can, then obviously PayPal will start monetizing better. But until then, we might see it continuing to fall. Verizon, $31.36 now. The dividend, 8.48% on Verizon. We're seeing it down just a little bit as the market opens. NEO, $7.56, down 0.26%. Truist, I think they had a pretty good earnings, but they're at $27.12, down 0.11%. The regional banks are down because, that 10-year at 5%, it's hard for the regional banks to be up. So we're going to see some pain in the regional banks. Netflix was red in the pre-market at $3.99, now at $406. Again, I've got to congratulate Netflix. I was actually reading over their shareholder letter. We'll go through that in a second. And their earnings were great. Their earnings were just phenomenal. They beat every single metric. 9 million paid net new subscribers. Netflix deserves the premium, quite frankly. Netflix was about $350 or $340 before their earnings. Now they're at $406. So not bad at all for Netflix. United, up 0.4% today. American Airlines down a little bit. Delta's up. Nvidia, $410. Wow. Nvidia is officially below the low that it was at 2 weeks ago. 2 weeks ago, Nvidia was at $412. Then it rallied to $416. Now Nvidia's at $411. Wow. Okay. So Nvidia is continuing to go just a little bit lower. PayPal keeps falling from Victor. Yeah, it's red. It is red indeed. Nvidia down. All right. So ASML 575. This one's down off of a nasty earnings last week at 4%. SMCI at 243. TSM 89. That's under 90. AMD at $100. This was above 100 for a while. We might see it crack below that level. Unity, look at that, down 5% on the day. I don't know why Unity's down 5%. Maybe that's just macro, but that new CEO or interim CEO is likely causing some kerfuffles in the company until they have an official CEO. $25.94. The stock was at basically $49.50 the day Apple announced the Vision Pro and had an announcement. So that was the top. So shareholders are down pretty aggressively from that $49 price at $29,594. So we'll see what ends up happening with Unity. I think they have earnings the week after this week. And so we'll see how their earnings go. Amazon, 125, Google, 136, Robinhood, just 6 cents above $9, Uber at $42. Walgreens is actually green today. I think they had some new news come out about their CEO this morning. Walgreens at 1.65, and Square continuing to be stuck in that $40 range at 43. Let's check back on Tesla and Palantir. Wow, Tesla 206, down another 2.7% as we inch towards 5 minutes of the market opening. Tesla is down. Tesla right now, 52-week, not 52-week low. The 52-week low is $101.8 and $101. 9.44 million shares have been traded and exchanged hands so far in Tesla. 5 minutes into the market open, and out of those 9.5 million shares, more people have sold than bought, being down 2.91%, $205. And Palantir, wow, look at that on Palantir, 1537. 1537. My goodness, that's down 4% within the first 4 minutes. On Palantir, 5.62 million shares have traded hands, and the majority of those shares have sold their shares to other hands at a lower price. You know, I have a bunch of cash secured puts on November 3rd, and I thought November 3rd was a great day, and it's a $15 strike. I was like, you know what? If I have a $15 average, again, I've been saying 15 and below, that's when I like buying. I've been pretty consistent that I don't like buying above 15. I like buying 15 and below. So I was like, you know what? Their earnings is going to be November 7th, November 8th, like it usually is, November 3rd. I'll just get my collateral back and it'll be good. It'll be above 15 bucks. Now their earnings is November 2nd, which means the day after my cash secured puts either get assigned to me or I collect my premium and I have a merry old day. And it seems like, you know, if we shit the bed on earnings, this bad boy is not staying above 15. If we were at 18 right now, I would say, all right, we might go from 18 to 16. But now that we're at 1540, we might go from 1540 down to 14. So I might get some shares assigned to me on November 2nd. And I'd be happy at that $15 average to get them. But it just goes to show, like, you better be happy when you buy those, sell those cash secured puts, because if you get them at a price that you're not happy at, they could end up being assigned. And for the majority of this month, I actually thought they would get assigned. And then the Israel thing happened, and then Palantir blew up to 18. And I was like, oh, they're not going to be assigned. And now we're right back down, and now they might end up being assigned. So we will end up seeing what they happen. Are those puts at a profit at this moment? Yes. Remember, a cash secured put, if it's above the strike price, I'm at a profit. So if it closes at $15.01 on Friday, or on November 3rd, whatever day that is, I think that's that is a Friday. Then I'll collect my premium and I don't have to buy the shares. And I'll get my collateral back. If they're $14.99, I have to buy those shares, which again, I'm fine with. I want Palantir at 15. I have a bunch of $14 strikes. I have a 13.5 strikes. I just, it's crazy because you would imagine we're at 18 for a long time. We're all right. And then in a week, things change. I mean, for Tesla, imagine Tesla now at 205, another intraday low. Imagine people that, had some cash secured puts at Tesla at 220 or 230 when the stock was at 260. Like, all right, it's not going to get to 230. People that at 215, it's not going to go from 250 to 215. Now you're going to have to buy those shares at 215, 220. And because the stock's at 205, you're already down 15, 20 bucks on those shares. And so that's the tough part about having cash secured puts. You better be really excited to own those companies. But let's check on Enphase. Let's see how that's doing. Enphase right now, 97, down almost 2% on the day, 1.53. SolarEdge down 0.81%. Bitcoin is the only green I'm seeing. If you guys see some other green, let me know. But oh wow, look at the S&P 500. This is a new low in terms of in the past 5 months. We haven't seen 418. 419 was the low we saw last week. Now we're at 418. If we get to 410 could you imagine? Could you just imagine for a second? We see 300 near that S&P, like it's 399, I mean, the bears would be just just so happy. They would be salivating at the mouth if we see a 300 on that S&P 500, because no one thought we were going to the 300s. We're like, you know what? We got past that. We got past 360. That's like February prices. We're done with that. For us to go back to those levels would be intense. I mean, for us to see that. And that means stocks are going to take a beating. Now, granted, that might set up for a good 2024 because then rates have to come down. And then if you're coming from 390 to 440, that's actually a nice run. Then if you have to go from 420 to 5,000. But I don't know. It's gonna be tough to see how it plays out. NASDAQ at 12,873. So we're seeing the NASDAQ down 100 points as we begin the market. Elf is green. This is a Jeremy stock, up 0.04%. Snapchat also reports earnings. And I think their earnings are actually going to go well because their internal memos show that their DAUs increased by 30 million. So I think their user numbers are going to be great. Now, monetization on those user numbers, we have no idea, but I think the stock actually is going to do fine tomorrow. But it's green today at 946. MicroStrategy is up. This is another Bitcoin stock I forgot about. Meta is down at 307. Roku is up. Wow, Roku below 60, even though it's green today. And then regional banks are down. Where's ARK? How's ARK doing? ARK Innovation is at 35.47. So ARK is down pretty badly, down 1.5%. And then where's Meet Kevin's PP? 21.27. Remember, the two biggest companies he has here are Enphase and Tesla. Now, I don't know what rebalancing he's doing because he doesn't disclose the numbers every day. Or does he? Does he do that? Is it on his website? I would actually love to know what is in there. But those two stocks have just been destroyed. And so you would imagine he's seeing some decline there. Oh, I can see the data as of... Oh, he does disclose this stuff, I think. Fiscal Q3 holdings. Oh, okay, here we go. So let's actually look at it. So we have Q3 holdings. I don't know if this is fully up to date, but this is at least the best we've got. Let's share this tab. So he has PayPal in here? Oh, wow. Okay, so he has TTD, the trade desk. He's had that for a while. He has this aerospace stock, Embrar SA. I don't even know what that is. He has 124,000 shares of that. PayPal, he has 22,000 shares. Tesla, he has 36,000 shares. That's a $10 million position. 22% of the ETF. You guys can see this, right? Yeah, you guys can see this. Okay. Apple, he has 11%, 24,000 shares. That's worth, how much is that worth? $4.8 million. And then how much Enphase does he have? He has no Enphase. Am I reading this wrong? Oh, no, he does. My bad. Okay, Enphase, he has 35,000 shares at $5.3 million. So Enphase is at 30. So he has 35,000 Enphase shares. And he has how many Tesla shares? 36,000 Tesla shares. Tesla is 22% of the portfolio. Enphase and SolarEdge. Oh, he has 3,000 SolarEdge shares, but basically most of it is Enphase. 35,000 is 14% of the portfolio. Wow. As an ETF, he is forced to bounce and report holdings changes daily, I believe. Really? I thought that was a Kathy. What? You have to report that daily? I did not know you have to do that daily. Interesting. Well, all right. At least we have up to Q3. So I did not know he bought PayPal. Well, Meet Kevin's bullish on PayPal. I didn't know. He didn't have PayPal like 6 months ago when I checked the ETF. Apple, Tesla, PayPal, Trade Desk, Enphase. And then he has a little bit of Etsy. He has 8,000 shares of Etsy. Also, he does have a decent amount of semis. AMD, NVIDIA, Intel, AS. Wow, he's got a whole semis ETF inside of the ETF. Look at that. $10 million of semis. Basically $10 million of Tesla, 9.8, and then 6.1 million of Enphase. So if Enphase is down, Tesla's down, and the semis are down pretty. I don't know his average prices on these. Yeah, that ETF's going to be hurt a little bit today. You know what I want? I want to look at Ross Gerber's ETF because Gerber Kawasaki. Oh yeah, this one's kind of shitting the bed also. Now to be fair, Gerber Kawasaki has talked about. He went public in 2021, which is the worst time to go public. But nonetheless, obviously, if you go public during that time, I think he went public at like $22, $21. Let me go to the max chart on this. $28. He went public at 25. 28 was the high. 14 was the low. He's basically at his 2022 lows at 14.15. I think this company, I'll check on the ETFs in here. Let me actually check Robinhood right now. But I think Google and Robinhood or Tesla are the biggest holdings in ETF. Oh, and great. I opened up my portfolio and I'm down $4,210. That's just phenomenal. A beautiful way to start Monday morning, to be down $4,000. Why not? It's a beautiful Monday morning. It's nice. The leaves are different in October in New Jersey. I'm seeing yellow everywhere. But of course, down 4,000. Why not? Because the stock market continues to reward me by being down. Okay, so his holdings are Tesla 7.43, NVIDIA 7.1, Alphabet 5.9, and then Microsoft, MGM, Apple, Disney. He has Disney in this thing? Oh boy, of course that ETF. Yeah, if you got 5% of your ETF in Disney, really? He had to buy it like 190 or something if he started this in 2021. Oh my. So Tesla and NVIDIA are 7% of the portfolio, then Google at 5%, Microsoft and MGM at another 7%. So yeah, every ETF is in a little pain right now. Tesla should advertise. That's why my fund sucks. Look, I mean, look, I don't want to shit on me, Kevin, because it's really hard to run an ETF. I have all the respect in the world. I mean, one day I would even love to do that far into the future. Definitely not anytime soon. But it's tough, man. You never know. Like, it's just tough. Tesla and Enphase were great picks all throughout this year. Phenomenal picks. And now it's just like you're bag holding. You're bag holding a lot. I'm down 30K. Yeah, if anyone's comfortable showing how much they're down on the day, we do this on red days. It's like a community bonding event. So I'll go first again. You guys can say if you're comfortable for the day. Oh, great! It's 5,406. It increased $600 in the past 40 seconds. Oh my God! Look at this red. Oh my God! Goodness gracious! Some of these positions, my goodness, some of these positions, they're just like I was up. Oh man, this is just sad. This is one of those days where you're like, you know what? Like I have my health, you know, I think I have like family, and, you know, I have, what else do I have? I have a bed to sleep on, and, you know, I have some cold Dunkin' Donuts here that I'm not going to drink because it's cold. And I have this iPad. I found this iPad the other day. I started using the iPad. I downloaded Webull. So now I'm going to be one of those people that looks professional, that has the charts in the background, right? So I have to be grateful for those things. Because the portfolio isn't that grateful to be. Down 7,000, down 6,000. Oh, man. Mateo, 15K on the day. Woo! That's down 45,000. Okay, Angela's packing. The more you're down, obviously, the bigger your portfolio is. So we all know if you're down a lot. Down 35,000 today. Look, and remember, I'm saying this in good jest. If you're down a lot of money, it is what it is. You just let it kind of play out. Eventually that stuff comes back. We've all been through 2022, but it sucked to kind of see this. Kelly says, you have me. Yes, I'm grateful for friends like Kelly that I'll be seeing this week. I'll be going to Las Vegas. So, I'll be seeing people. There's friends. There's all this stuff to be excited for, but then you look at your portfolio and you're down a lot. Technical investor Wong down 2,000, down 150,000. Holy crap, bro. How big is the portfolio? Fuck. I'm down a brand new Tesla fully loaded. Dude, I want to be like you guys when I grow up. That's a lot. I'm not looking, Daphne. That's the right thing to do. I'm not looking. Oh my. All right. So if you're just joining, let's take the main headlines for today. The 10-year right now inching at that 5%, 4.978. That's where we're seeing it right now. That's why equities are really not doing that good. Stocks were the 10-year was above 5% just an hour ago. 4.976, basically call it at 5%. Equities kind of have nowhere to run when we're seeing stocks go down that much. We have earnings this week, and look, Q3 earnings were supposed to be phenomenal for big tech. They might end up being good, but the problem is with that 10-year at 5%, investors just might not feel paying 28 times forward earnings for a company like Google that might be growing 7 or 8% year over year is worth it. If they can get 5% from Robinhood, just put the cash in there and get the 5%. They can get 4.5% from SoFi. They can get 5% from the 10-year. Like, it's just a tough situation to be in right now if you are investing in this markets. And as a result of that, we're seeing some problems here. I want to pull up a couple of things, and then we'll keep moving forward. Okay, cool. This is what I wanted to see. So here's JP Morgan talking a little bit about what they expect going into the end of the year in terms of another rate hike and how it could affect equity markets. Let's pull that up and let's see what they have to say.
Now is Mira Pandit, JP Morgan, asset management global market strategist. Good morning to you. You've been listening to this conversation. Do you want to weigh in on this piece of it?
Absolutely. I mean, I think that it is a question of control versus what the Fed is finding convenient. Because if you look at the short end of the curve,
right,
in terms of 2-year yields, they really haven't moved a lot recently. So in that sense, they're pretty well under control in terms of garnering short-term rates in the area they want. The issue is a long end, and with them stepping back as a major buyer, there's really only one way that they can influence the curve. And I think that the big issue at the long end of the curve is the big existential issues in terms of supply, federal finances in the long run, and how we actually finance the deficits that we need to at higher and higher rates, and who's going to be the buyer given some of the uncertainty around that. So I think right now it's very convenient for the Fed in terms of further rate moves that you have the long end move higher and doing some of the work for them, tighter financial conditions. The question is, if they do want to ease back on some of that restrictiveness.
What's your prognostication at this point about what they do next and when, if they're going to do something?
Let's not take another rate hike off the table. I know that people came out of last week thinking that Powell was very dovish, but I actually heard a very balanced view of we're in restrictive territory, but further rate hikes might be necessary. But there's
In
further
this
tightening
calendar
in the,
year?
potentially in December.
Okay.
I think
Just to clarify, I don't think we're getting another rate hike. I really don't. I mean, I personally don't think it's happening, but obviously anything could happen.
that if
You
they-
think in November off the table at this point?
At this point, I don't think there was strong enough signaling to say we were going to do
Right.
one more rate hike soon. But it was only a month ago that most of the FOMC
Right.
participants saw another hike. So all of them changed their mind in the last couple weeks.
Could a really strong GDP number change that? I mean,
Potentially. I mean, we've had a string of strong data. I think the real GDP numbers that we're likely to get later this week have been well forecasted for months now, that this is going to be a really strong print. When you add on to that higher CPI, higher jobs, higher retail sales.
yeah, but 4.5% for the consensus versus 5.4% or whatever it was for the Atlanta Fed. That's a big difference. If there's a number north of 5%, I would think that would potentially change the scenario.
Yeah, look, the GDP estimates also have to come out soon. Remember, those GDP estimates for Q3 are like 5% year over year. If those GDP estimates come down, then we're also going to see some decline, not only in equities, but also in the general market having an appetite for growth, right? If GDP is not growing that well. Now, granted, that's also a catch-22, or there's like a double bind here, because it's good if GDP growth comes down, because that means the economy is slowing, which means the Fed can be more likely to lower interest rates. The problem with the Fed is they're like, everyone's employed, everyone has a crap ton of money to spend, people are buying these $4.25 Dunkin' Donut lattes like they have no issue in the world. And so, like, how are we supposed to lower rates when everything's going so good, because inflation's not going to go down? If GDP growth comes down, then the Fed has an excuse to do that. The problem is, I don't know if that GDP growth is coming down, because Q3 earnings, as we're seeing, remember last week, the banks did phenomenal. Banks did great. And I think tech is going to do, no company has had a bad earning so far. Even Walgreens, like no company has had, their stock might have gone down, right? ASML, like those stocks might, but they have not been bad earnings. They're not been 2022. Meta goes from 320 to 260. Netflix goes from 350 to 240 in one day. We haven't seen any of those types outside of Enphase and SolarEdge, but that's just pure solar, right? That's not the entire market. So it's really hard for the Fed to kind of make the decision of if we're going to raise rates or not. And as Philip says, my calls cannot take another rate hike. Like legitimately, my options on this market, the option strategies I have placed, the asymmetrical bet I am looking to make a shitload of money on, they cannot handle another rate hike. It's not possible. Like they my calls will end up like my calls will not have a good connection to make the call. Like, you know that Verizon commercial, can you hear me now? No, I can't hear you now. The call's not going through. I can't hear you. I cannot hear you. All I see is red, and not because the logo of Verizon is red. It's because these calls are down $50,000. Like this is just we can't handle it. We cannot do this. This is not possible. And I think Jerome understands that to an extent. I think Jerome understands that my calls can't handle this shit. And hopefully he has some sympathy for me. Trueflation showing 2.34%. If you look at Trueflation, inflation still is coming down aggressively in the month of October. Obviously, the United States saying it's at 3.7%, or at least that's what the Fed is saying it's at. U.S. government reported 3.7, Trueflation at 2.3. You know, what's also interesting right here, the aggregated rate of inflation over the past 3 years is 23.94%. So if your portfolio, if your assets, it's whatever you owned, has not gone up at least 23.94% in the past 3 years, at least in the United States, you are underwater on your money in terms of overall real purchasing power. So, you know, that's just one thing to think about for the S&P 500 investors, the index fund investors. Like, that's kind of why people want individual equities, because where is the alpha coming from if you're going to get all that purchasing power eaten away by inflation? Your call got disconnected. That's the word I was looking for, Edmund. Thank you. I was like, what's the word to say you're disconnected? That's what I should have said. That would have been that would have been like, my call's getting disconnected. That would have been perfect. Couldn't think of it because I was just infatuated with all the red that I'm seeing on my portfolio that I couldn't think straight. Oh, now my portfolio. Oh, I'm only down 2,000 now. I was down 5,000 for the day. Now I'm down. What came up? All right, let's take a look at some of the market. Oh, maybe we're turning a little green. Maybe the market's being a little bipolar today. And the market is literally like a girlfriend, bro. The market is literally like a girlfriend. Down 6,000 now, down 2,000. Like, where do you want to eat, babe? Oh, I don't know. It's like, all right, I guess we're not. Oh no, Chipotle. It's like, you just said you don't know. It's like, now you want to do Chipotle. It's like, okay, all right, let's go to Chipotle. Like, this is ridiculous. ARK at 35, Enphase at 98, SolarEdge at 83. Tesla 205. So Tesla's not catching a break, down 2.8 cents, 2.8%. Could you imagine 2.8 cents? Tesla's down 2.8 cents on the day. No, it's 2.8%. S&P 500 420, recovering a little bit from 418. Palantir 1535. It was at 1542 for a second, so still on that 4.5% down day. Appl at 170, holding on for dear life to not go to the 160 range. PayPal at 53, bouncing up from 52. What else do we have? ARM at 48. You are underwater if you bought that ARM IPO. So that is down. The ARM IPO is indeed down. And Instacart is likely also down. Yeah, 24. You know, like this is, and again, there's no credit I'm taking for this by any sense of the imagination because it was just absolutely obvious. But we said consistently on the market open, look, don't buy those fucking IPOs. Like, don't buy ARM, don't buy IPO. These are big VCs. These are venture capitalists that are going to make 100x when this thing goes public for you to make like a couple of dollars if it goes above the IPO price. This is not a IPO to buy. Not even ARM. SoftBank was trying to unload their bags on retail. And so it sucks, man. It's not nice to see some of this. And that's why I was saying, you know, people were calling me crazy saying, oh, SoFi's offering this is not good for SoFi. Obviously, it's good for SoFi. The problem is, imagine if you bought it on SoFi and you thought, oh, I'm so happy SoFi allocated me all these shares as a retail investor. I'm so like enthralled for the fact that this new application gave me shares of Instacart, this beautiful new company. And then you're down 20, 30%. You're not going to have that much of a friendly opinion of SoFi anymore, whether you like it or not, right? And so that was my whole point. Like, we know these IPOs are going to suck. They ended up sucking. And so now you're seeing some pain. Nonetheless, I don't think that's going to affect SoFi, but that's kind of the broader argument here. Amazon at 124, Google at 136, SoFi actually at $7. SoFi is going to have earnings on October 30th. I will not be live for that because I'm going to be in Vegas, but I hope we can get a bounce to 950. That would be nice on SoFi, even though I think it'll be short-lived, even if we see it. So we're going to see where it goes. Amit, what are your holdings? TFC, Robinhood, PayPal, SoFi, Palantir. And there's one more that I'm forgetting. What's the other one that I'm forgetting? No, is that it? Oh, Google. Google's doing good because Google can survive some of these interest rates. But outside of that, you know, some of these other companies are doing pretty bad. Amit, what do you think about buying Palantir sub 15? I like sub 15. I've been saying that for the past couple months. Sub 15, I like. Now, granted, look, on earnings, let's talk about Palantir for a second. On earnings, we could see a pretty dramatic decline simply because of the fact that the revenue growth isn't there, right? Like remember, all these contracts we're seeing, none of this is going to materialize into Q3. NHS, $250 million, $60 million from the NIH, all these contracts, it's good for the stock long-term, good for the company long-term, but it's not Q3 revenue boosting by any sense of the imagination. I don't even know if they're allowed to recognize that revenue until beginning of Q1 2024. So remember, last year's growth was, or last quarter was 13%. They guided a little bit higher. We know stock-based comp is going to go up. Remember that. The management said the next 2 quarters, you're going to see an uptick in stock-based comp because we saw a decrease in the first 2 quarters. So stock-based comp has normalized at 22% of revenues. It was, 70% of revenues in 2020. So, and it's gone down 27.5% year over year, but it doesn't mean that it's not going to be higher next quarter. On top of that, I don't know if management has unleashed any of their money on buybacks. And Netflix, actually, let me pull up their Netflix IR. They apparently you have to disclose if you've bought back the stock in your investor relations. So Netflix said in their letter to shareholders, they bought back $2.5 billion of shares in Q3. So I don't know if Palantir is going to say we bought back any stock. I don't think they did, quite frankly. I think like they're waiting for like 11, 12 if we ever get there. Remember, they said they don't have to use that. See right here on Netflix, we repurchased 2.5 billion shares of shares in Q3. So think about this. You get Palantir with with increased stock-based compensation, no share buybacks, 13 to 15% year-over-year revenue growth, which is obviously not good for a high-growth tech company. And then on top of that, you're barely GAAP profitable, maybe because of treasury bills. I don't think the market's going to be like, oh my God, it deserves a massive premium. That's the problem. And so I don't know. Now, granted, that's the bear case. The bull case is we get the NHS announcement on that day. We bought back a crap ton of stock. We announced some more contracts, maybe leading up to it. Revenue growth isn't 13%. Maybe it's 17, 18%, which is still low, but it's definitely better than what it was before. And then, maybe they announce AIP customer growth is like 300 customers, 400 customers, even if they're not being monetized yet, that customer count is growing magically. This is the dream scenario I think every Palantir shareholder should want. On November 2nd, they should announce customer growth of AIP to be upwards of 50% month over month, like they're currently at. So we're at like 250 customers. That's the first thing. Number two, you want revenue growth at like 557 million. The street expects 556. So 556 to 557. So barely a beat. And then you want GAAP profitability, number three. And then the final thing you want is customer count overall growth of 9% or higher, because last quarter was 8%. So you want to see even 8.5% or higher customer count growth quarter over quarter, which means we would be at around 41 to 42 customers. We had 38 customers last quarter. All four of those things need to happen, and the stock should tank 30%. That is a dream scenario for Palantir investors, at least a dream scenario for me as a Palantir investor, because that means everything I want is happening in terms of GAAP profitability, increased AIP growth, decent revenue growth, at least meeting expectations, not missing expectations, and increased customer count quarter over quarter. And the market still doesn't understand the opportunity with AIP, which means I buy, which means we get like 11 or 12 bucks. Now, I don't know if that happens. 11 or 12 is pretty aggressive. 13 or 14 is more where I think we could end up if we have a bad earnings. But that is my scenario for where it would end up happening. So, we'll end up seeing where it goes from there. But that's what we're going to see on Palantir. Back to 22 to 25 billion. Yeah, right now I think it's at 70. Where is it? No, not 70. 33 billion. Yeah, I could see that happening. But again, we've got to see if the quarter actually shits the bed or if the quarter is decent enough. And then we'll know. Still, NHS deal. We don't have the NHS deal yet. Amit, are you planning to share Palantir earnings expectation? Okay, it's good you asked that, Chris, because I just shared everything that I thought would happen for Palantir. Truist, also, let me mention them. They have their $16 buy rating on SoFi. So some banks are still very bullish on SoFi. Truist right now at 17 or 16 bucks for their rating on SoFi. But we'll see where SoFi goes from there. One other headline, Mexican economic activity has accelerated in the month of August. Economic activity in Mexico rose 3.7% from the corresponding period from the previous year in August of 2023. So that beat expectations of 3.4% that the market thought, and it was better than 3.2% last month. So we're seeing around the world, places like Mexico, which is now becoming a massive importer of goods or exporter of goods to the United States. Some people thinking it's going to overtake China, actually doing well. But the question becomes in the United States, can we get our inflation rates to come down so that we can get interest rates to come down and get the market starting to roll? Revenue growth will not be 17, 18%. Yeah, we'll see. Look, we'll see. I mean, that would be really awesome. But if we don't see it, then, we'd probably be at 13, 14% like we thought last time. Remember, a lot of people thought revenue was going to be really good for Palantir last quarter, and it ended up being 13%, right? They beat by $1 million, which is why I think we might see the same thing there. All right. That's it for me, folks. Thank you all for joining here and being here today. Let's do the word of the day and we'll end it out. Again, 10-year is high, equities are low. And as a result of that, we kind of just got to deal with it. Quick last look at the charts. Enphase at 99, inching a little bit more green. Tesla at 205, still red on the day. Palantir 1557, a little bit higher from 1530. SoFi at 729, and the S&P 500 is at 420.37, up from that 418 level, still at that 200-day moving average. Palantir at 1552 for the day. It's one of those days where it's like the portfolio sucks, and you kind of just got to deal with the fact that the portfolio sucks. All right, word of the day. Let's see what we got. Word of the day is panacea.
Panacea.
An answer or solution for all problems or difficulties. That's a good one. It's not bad. The new software claims to be a panacea for productivity issues. There's no magic pill or panacea that can instantly cure a broken heart. Obviously, maybe interest rates going lower would be a panacea for a lot of our portfolios, but we can't expect that anytime soon. Hopefully, Jerome Powell gets us that in 2024. All right, that's it. Have a great start to the week, everybody. Monday morning. Let's kill it this week. Last week of October. Let's do what we got to do. I will be 26 years old in 4 days. So got that to look forward to. Another year closer to death. That's just, why not? And no, but I'm super excited. We'll be 26 years old, and we'll see how the market ends up turning out for the rest of the week. Thank you, everybody. Have a great day. I'll see you on the Palantir Daily Show. That'll be out in a couple of hours, and then Finance Junkies tonight at 7 p.m. Thank you, everybody. Have a great Monday morning. See you guys tomorrow. Bye-bye.